they earn learn tokens in their wallet. So even for today's session, they will be earning that. And then they can use those learn tokens to get discounts of free courses, premium courses, which are only available against learn tokens.
Right.
And
Yeah.
on a personal level, of course, I'm also working for the Hi-Fi blockchain project that you're aware.
Yeah.
So there also we're getting very good feedback and looking to take it forward soon.
No, no, absolutely. We should take it forward and innovate basically because yeah, there are some loose ends, but we can tie it up as we go along.
Absolutely.
We can't
Absolutely.
wait to have that perfect launch. It never happens.
Absolutely correct. Okay, we are live on social, so I think we can start. So, hello everyone, and thanks for joining us today. We are going to have a very interesting conversation with Mr. Joshi, who is the CTO of the IFSCA, which is a very unique regulator in India, which is actually having the powers of multiple regulators for a specific jurisdiction. So, instead of me trying to explain that to you, it's over to you, Mr. Joshi. If you could briefly tell us about Gift City as well as IFSC.
Sure. Thank you so much, Rohas. Good morning, everybody, or good afternoon, good evening, wherever you are. Um, uh, Before getting started, just want to make it very clear. Some of these go to be my personal views. I don't think you will have the official word here. But then, yeah, if you don't have personal views and discussions, I don't think we will have progress. So that's where we thought, let's have some, heart-to-heart, man-to-man conversations on topics. So getting started with Gift City, IFSC, IFSCA, these three are sometimes very much interchanged by people. So Gift City is a geography located in Gandhinagar, which is in Gujarat, India, right? And within Gift City, you have two areas. One is called the DTA, Domestic Tariff Area, which is like regular India. I would call it as domestic India for the moment. And then there is an SEZ, Special Economic Zone, within which we have this IFSC, International Financial Service Center. So this is the foreign jurisdiction, as I would call it. So what I mean by IFSC is foreign jurisdiction. So you use foreign currencies to transact. There is no Indian rupee. It is as good as any offshore location, like be it Dubai, Singapore, whatsoever. The rupee is fully convertible here. Tax regime is completely transparent. There is no
I guess there is a slight net issue, so he has logged off. Just give us a couple of minutes while we get him back online. So while he's getting back online, I'll just briefly explain what all he has said so far. So as you know, in Gandhinagar, which is in Gujarat in India, a special, very interesting concept has been set up, which is called as the gift city, and that's divided into two parts. So you have a domestic tariff area, and you have the SEZ kind of a foreign area. So in the domestic area, you do regular business as if you're in India, but in the SEZ, it's as if it's a foreign jurisdiction, right? Which basically means that you don't use the rupee for transaction, you use the US dollar for transaction. So although geographically that part is in India, for all legal purposes you can consider that part is actually out of India. Do you guys have any questions so far while we're waiting for him to come back online? If you have some questions, I could answer them. Yeah, so M's question is, does our government, actually this is set up by the government of India. So IFSCA is not a private body. It is a regulator. So like you have the Reserve Bank of India, you have the SEBI, you have IRDA for the insurance sector, PFRDA for the pension sector. Similarly, IFSCA is actually a regulator. So you could check out their website. I'll post the link here. It's ifsca.gov.in. So don't worry about that. It's all complete. It's actually it's an innovation by the government of India. I have put the link, so you can have a look at that later. So I put the link. It's ifsca.gov.in, and yeah, I think he's back.
Yeah. Can you hear me, Rohas?
Absolutely, I can hear you.
See, I was saying about taxes, and immediately I got a blue screen of death on my laptop. So something very strange of taxes. Like they say, taxes and death are the only certain things in life. So it happened simultaneously, the death of my laptop. So sorry, folks. Apologies for that. So what I'm trying to say is, I could see some messages. Does our government allow this? Yeah, I know people will be shocked to know there is something like this. This is a very new concept the government of India has brought in, because there is a flight of talent and capital to offshore locations, right? It's all going out of India. So the government said, hey, why not we create an offshore here in the onshore within India? So that's where this GIFT IFSC. IFSC is the concept. GIFT is the place. So this is the first IFSC in the country. Probably if this stabilizes in a few years, you could see some more coming up. So now this is a foreign jurisdiction, competitive tax regime, zero income tax, for the 10 of the 15 years, zero GST, zero SGT, zero stamp duty. I mean, everything is literally zero. So it is on par with any other foreign jurisdiction or offshore jurisdiction where people take flight of capital and talent. So that's how it is. Now, initially, when they started this, the four sectoral regulators, the financial sector regulators, RBI, SEBI, IRDA and PFRDA, were the regulators for this jurisdiction as well, right? So when a bank had to be set up, they take a license from RBI. When a stock exchange came, it went to SEBI. Insurance guys went to IRDA, and funds went to PFRDA, right? Pension funds. But then for the ease of doing business, in 2019, the government or the Act of Parliament said, hey, let's create a unified regulator for this with the powers of RBI, SEBI, IRDA, and PFRDA, right? And in 2020, IFSCA authority, the IFSCA, which is the regulator, was born. So I represent that institution, which is a unified regulator, which has the powers of the four regulators, because in this zone, this IFSC foreign jurisdiction, if a bank has to come and set up, we give the license. IFSCA gives the license, not RBI. If an exchange has to come, if a broker has to come, the capital markets related guys have to come, then again, IFSCA gives the authorization or approval. Similarly for insurance folks and so on and so forth. So that's the concept of GIFT City, IFSC and IFSCA as a regulator. Hope that makes it easy for all of you.
Absolutely. So there's an interesting question from Abhishek. Can any kind of a company be opened in IFSCA/GIFT City, or only tech finance companies?
Okay. So GIFT, as you know, was coined when our Honorable Prime Minister was the Chief Minister of Gujarat. So Gujarat International Finance and Tech City, that's how it is. So you should understand the basic premise here, right? Any regulator, be it RBI or anywhere in the world, the regulators draw their powers from the acts, from the regulations, that's how it comes in. So when IFSC was set up, IFSCA started giving out regulations. So they have banking regulations, finance company regulations, for markets, market intermediaries, insurance companies, and so on and so forth. So it's IFSC, which is International Financial Service Center, right? So the aim is to compete with Singapore and Dubai in the short term to medium term, and in the long term compete with London and New York. So it is not just for tech kind of companies. It's like for the entire ecosystem, financial services, financial products, the entire ecosystem is there. But you need to have a regulatory framework, right? So far you have had for all the basic services, which the other four regulators were doing. So what we did was, early in April this year, we said, hey, we need to encourage fintechs and tech fins. So what we mean by fintechs and tech fins is, fintechs are very specific to the banking vertical or the capital market vertical or the insurance vertical. Example being payments, buy now, pay later, neobanks, all these are banking vertical species for me. Capital markets could be alternate trading platforms, robo advisories and stuff like that. Insurtechs could come under your insurance vertical. So these are pure play fintechs. But there are tech fins too, horizontals. Like for example, KYC, AML, digital identity companies. They cut across all the three, four verticals. Cybersecurity, banks need them, markets need them, insurance guys need them, right? Or I could put for fraud detection is another thing. RegTech, SupTech. We are talking about climate tech, green tech, because again, that cuts across. ESG is not just for banking, it's needed for stock market, the markets and the companies and even insurances are catching up that. Similarly, we have opened it up to so many different things, and we launched a regulatory framework. So by launching that, that gives the powers to the regulator to give authorizations to fintechs and tech fins. So probably we are the only regulator probably in the world who has come up with this regulatory framework, which even includes metaverse, Web 3.0, longevity finance, blockchain, and so on and so forth. So we are encouraging that under the tech fin, because they're not pure fintech. A blockchain can cut across, verticals. Same case with Web 3.0 and metaverse and so on and so forth. So that's how the construct is. So today we have the provision to onboard fintechs and tech fins. So that's the regulatory framework which we have. I hope I answered that question, Rohit.
Absolutely, and it's very nice to hear you talk about
Rohit, you're on mute.
Can you hear me now?
Yes.
Okay. So it's very nice to hear you talk about Web3, blockchain, and metaverse in such a positive manner, because usually in the media, there's always so much negativity around it. The media portrays it as if blockchain can only be used to become criminals. So I'm very happy to hear you speak about it in a positive light, because at the end of the day, blockchain is a technology. And as you correctly said, it can cut across so many different verticals. So that's awesome.
Let me give a different perspective here. See, today, if you look at it, right, the financial world or the way it is going to, we can broadly classify into three buckets. One is your embedded finance. So a lot of your fintech will get embedded everywhere, the convergence part of it, right? And second is the sustainable finance, because everything is about sustainability today. You turn left, right, or center. And the third, you like it or not, it's going to be decentralized finance, right? Because already more than $100 billion worth of stuff is already pumped in, and it's only increasing. You cannot push it under the carpet. Probably it needs some more time to get more mature. That's definitely there, and get into the mainstream. But I don't think there is no chance of wishing it away. So that's definitely there. And as a corollary, what we are also looking at is, like the way I was talking about the regulatory framework which we have put in, we are also seeing a new kind of finance called spatial finance. So we are encouraging space techs, because the geospatial intelligence can feed into these green fintechs who can help in greenwashing, can feed into agri-techs, so that you could give better agri loans or crop insurance. So when I say loan, it's a financial instrument. When I say insurance, it's a financial instrument. So we being a unified regulator, right, it all falls into our regulatory ambit. Whereas if you're only a banking regulator, you cannot take care of insurance. If you're only a markets regulator, you can't touch upon things across. So for us, it is very easy, and it's a logical choice, because we brought this fintech entity framework. Because as a unified regulator, fintechs, will straddle across different domains, right? I'm sure you would have heard about this 2010 ULIPs problem when the unit-linked insurance policy was launched. There was a lot of confusion. Should it be taken care by SEBI, or was it a IRDAI problem, right? Because it had securities investments part, it had the insurance part. Whereas in fintech, that is very much there. Like you start with digital lending, you add a bit of insurance, embedded insurance, then suddenly you migrate to a super app, so you straddle across things. So as a unified regulator, I think we are very uniquely positioned there to look at all of these new trends and technologies.
That's awesome. Thank you so much. Could you tell us about the Innovation Sandbox, which IFSCA has announced?
Right. So when we created this fintech entity framework, we had three broad principles which we had in mind. So one, we said it has to be very broad based. Let's not just do a subsection like I will look only into the BNPL segment, or I will look into something very narrow and then create regulations. Because what happens is this space is so innovative. In 6 months, you can see a lot of changes. Like today it can be BNPL, probably 1 year down the line it can be SNPL, save now pay later, instead of buy now pay later. Who knows, right? So it doesn't make sense to spend my little regulatory bandwidth on creating super niche regulation. So we said it should be broad based, right? So that's the sample I gave you. We looked at fintechs and tech fins. We are so broad on the verticals and also on the tech fin side, technology. Even AI ML companies doing work for fintechs come under tech fin, or financial institutions come under tech fin. So it's a very broad based thing. The second principle which we used was light touch. We did not want it to be a heavy duty compliance animal, because if you put a lot of prudential norms, like you need to have so much of balance sheet, and so on and so forth, it becomes very difficult for a bootstrapped innovator who's coming up with a fintech. So we said, hey, we will have it as a very light touch. I'll explain that a little bit more. And third principle which we had was, we wanted to borrow the famous Silicon Valley fail fast principle. We want people to fail fast, not in the negative sense, because we believe if the entrepreneurs know the feedback pretty quickly and they fail fast, I'm sure they'll pivot to something much better. And probably 2 or 3 pivots down the line, probably they're a unicorn, or they get their money's worth. So we felt that should be an option available in a regulatory framework, so that people can fail and pivot and again keep improving and finally hit that holy grail which they're looking for, right? So that was the 3 broad principles. So now in this fail fast, when you look at that, you can't directly give somebody a license or approval or authorization, right? You have to give them that hand-holding space. So that's where this concept of the sandboxes were born. So what happens is, in our fintech entity framework, we don't give out licenses, because license is a word for a very heavily regulated body or an entity like a bank. We use the word authorization. So we give authorization for fintechs and tech fins as fintech entity, right? But then when you're authorized, you're free to do business. There is no limitation. That means you're a pretty stable guy. And I have kept it as light touch, because for a company to get authorized in IFSC by the IFSCA, you need to be around with a good product and show that you have revenues for the 1 year out of 3 years. That's it. We do not have any cap or limit on how much should be the revenue or whatever. If you're a revenue making company, I'm not saying profit, I'm saying revenue making company, in the last 3 years, for just 1 year, we will give you authorization, because we want to keep it so light touch to encourage that innovation of the fintech. So that's the authorization. Now we have introduced something called limited use authorization, right? So this is where this sandboxes fit in. So when I say limited use authorization, definitely it will have a timeline. You can be given that authorization for say 6 months or a maximum of 1 year. And in genuine cases, we also can extend it beyond a year, right? Now, for somebody to be a limited use authorization entity, we need to give them a platform. Because if you're not fully authorized as a regulator, I have a fiduciary responsibility to the consumers, right? I have to look at the systemic risks. I have to take the entire ecosystem into account. So what I do is I introduce this term called sandbox. So we have introduced 2 sandboxes. One is the innovation sandbox, and other is the regulatory sandbox. So what we do is, if you have an out of the world idea, a technology which has not been tested or which is not there in production with enterprise level qualities of all the other things, let's put it in the innovation sandbox first. That's what we suggest. So we give a limited use authorization, a kind of a stamp, a regulatory authorization, but it's limited use in the innovation sandbox. So in the innovation sandbox, what we do is we help the fintech or the fintech entity, it could be even a tech fin, right? With market data. Let's say if they are doing some AI ML model and they want the exchange data to see how well their model is working. So probably we could facilitate that, right? So, but the key difference here is, in innovation sandbox, it's still like a UAT. You're not gone live. You're just refining your model. You're proving to the regulator that, hey, this works. And the regulator, as us, handholds them saying, hey, these are the loopholes you need to fix before we could upgrade you. So that is what happens in the innovation sandbox. Now you've proved your proof of concept, it works. We tried with some test data, some market data. Then we upgrade it to the next sandbox. Again, that is also under limited use authorization, but this is called regulatory sandbox. The only difference here is when you go to regulatory sandbox, we as a regulator allow you to have live users who will do live transactions. In the innovation, that is not allowed. We can give you all possible data to model and make your product perfect, but you don't have live users, there is no business happening. But in regulatory sandbox, business happens, but in a controlled manner, because as a regulator, we still are not sure how it works with the entire live environment. There is no regulation today. That's why you're in a regulatory sandbox, because the regulator gives you a regulatory dispensation or relaxation, as we call it, right? So that is why the regulatory sandbox is a crucial element to promote innovation in the country. So now what we do is, in the regulatory sandbox, we say, okay, you work with 50 customers or 100 customers. Let your exposure be not more than 1 million or 500K or 5 million, depending on the use cases you're bringing to the table, so that we now ring fence the risks. We know what exactly is going on. We take the appropriate consents from people, and then we allow that experiment to happen in a regulatory sandbox. And it has a time frame. So what happens is, the fintech entity can successfully exit out of the innovation sandbox, get upgraded to regulatory sandbox, can successfully exit out of the regulatory sandbox, and then get the full-fledged authorization and be in business. So that's how the hierarchy goes. Each time they fail, that is the fail fast, which I said, they know that, hey, this is not going to work. They go back to the design, drawing board, redesign it. Again, we launch. There is an option to again enter the sandbox and keep iterating. We will definitely provide that option. So this helps people to kind of come up with the model which the industry wants, which they think will lead them to the path of profitability. Because at the end of the day, we want you to be an authorized entity which flourishes, not just which kind of withers at that point in time. So that's the broad picture of how we have designed this fintech entity framework, with innovation sandbox, regulatory sandbox, for giving them the limited use authorization there, and then the full-fledged authorization once you're out of these sandboxes. Hope that gives you a picture, Rohit.
Absolutely, it's very clear. And in fact, there are a couple of interesting questions. So from LinkedIn, someone has asked that, can we really build metaverse projects in the TechFin space? And I think you've already answered that, yes, metaverse is one of the use cases that you are positive on. Another question is, can the IFSC itself start its own blockchain to eliminate current issues with centralized systems? What's your take on that?
See, we are a regulator, right? So as a regulator, you're not going to side with any technology. We will let the market forces, the technologies out there, to decide what you really want. Correct? So IFSC is a regulator starting a blockchain. I mean, it sounds a little far-fetched at the moment. Neither do we have that much of regulatory bandwidth, right? And nor do we want to kind of be very prescriptive to the industry saying, hey, this is what you should do. But we would encourage, people to come and set it up, because I firmly believe from being a consumer economy, we need to be a creator economy. I would love to see L1 blockchains coming from India, and we would love to give authorizations to them, because see, today, I mean, this is just a personal viewpoint. I read somewhere that US says Ethereum and the Ether nodes, it's primarily there in the US, so probably they will have jurisdiction over Ethereum. Now that is a big concern for me as an Indian regulator. Now, if I have businesses here and tomorrow cross-border data flows, privacy, data protection, all these are hanging out there, right? So how does it all pan out if Ethereum now is under, say, for example, CFTC or SEC's jurisdiction, right? So these are some of the things. So I think we have to be like Atmanirbhar, as our Honorable Prime Minister says, and we should also have our own L1s, and L2s, of course, build on top of it. So we will not create any blockchain, but we will support whoever wants to come and set it up over here in IFSC and serve the world. A point which I want to mention in this concept of IFSC is, since it is a foreign jurisdiction, your customers, invariably have to be the diaspora, Indian diaspora, or the foreign customers or the global jurisdictions. You will not be able to raise the invoice to the Indian customer, and that is where the whole thing is. Like, some of the banking services and capital market services, there is this LRS route through which they could come. Probably it's permitted by RBI. So if your solution is heavily dependent on the Indian market, the domestic market, then probably we need to really look at your use case to see if IFSC is the right place. But if you're dealing with US, UK, Canada clients, you're getting revenues through foreign currency, then IFSC is the place for you to be, considering the competitive tax regime and the other things which we are putting. So just want to put that out in perspective. And there was another question from a very different session, which I thought I will put it here as well. Bringing in capital to IFSC and taking it out is very easy because it's a foreign jurisdiction. Like, for example, today, if somebody wants to move money from Dubai to Singapore and move out of Singapore back to Dubai or any other jurisdiction, there is no need for the RBI to be kept in loop, right? Similarly, but however, in Singapore, the MAS will know about it because they are the regulator there. Similarly, in the IFSC, when you bring money from outside and put it here and take it back, India domestic is not involved, which means RBI is not involved. It's the IFSCA, which is the regulator, and IFSCA will know about it. But then the FEMA and the RBI, that doesn't come into play because it's purely two foreign jurisdictions talking. The moment you want to take money from IFSC to domestic India, that's when RBI comes in because you are entering into domestic India. So I just want to give that perspective also clear, because it becomes a little mud when you're having a chain product. Nodes are all around the place. So how does this money and data flow is something we need to be very, very clear.
That's amazing. That's very nice. Could you tell us about the recent collaboration that you've done with the Monetary Authority of Singapore?
Right. So with MAS, we have come up with a very unique FinTech bridge. We call it as a FinTech Cooperation Agreement. So MAS is pretty famous for a lot of their agreements with a lot of jurisdictions. And when I spoke to Mr. Swapnendu, he was like, hey, this is a very unique thing we are doing because we have never done this before. So we have really pushed the envelope there. And we took a 3-tier approach. So the first tier is what is common with what MAS has done with other jurisdictions and what all regulators do. That is referral. So I refer my fintechs here or tech fins here to MAS. MAS can refer companies from there to here. We handhold them into our respective regulatory sandboxes and let them explore the market, right? So that's what happens in a fintech bridge traditionally. So a regulator here, referring, because typically for a company to go to a new jurisdiction, figuring out the laws of the land, meeting the regulator, all becomes very challenging at times. So when a regulator himself or herself is involved, it becomes a lot easier for them. And that is the idea of this fintech bridge, right? So we feel that, hey, there are some very potential fintech entities who are registered with us. We could call up the MAS and say, hey, this is our referral to you. Can you take them into your regulatory sandbox? They will go through it. They will handhold the Indian fintechs entities over there. And then they will give the feedback, hey, this is what it is. You're good to go. These are the regulatory framework we have. You just need to apply to that and you're good to go for business there. Or they will give feedback that, hey, this doesn't work here. Probably you need to pivot to something else or whatever it is. So essentially it means you have a red carpet. They'll come to the new jurisdictions. Likewise for them to come here. Now, where we pushed the envelope a little further was the tier 2, where we said a fintech or a firm can apply to both the regulatory sandbox at the same time. So you could apply to 2 regulatory sandboxes at the same time, and both the regulators would work on it. And a corollary to that is, if it is a cross-border use case, you will get both the regulators sitting on one side of the table to examine it and to make sure it can be made live in the regulatory sandbox. So that's going to be very unique, because you don't get regulators from two different jurisdictions sitting together to evaluate one company's use case and see whether we can make something out of it. So that's tier 2. And we also pushed the envelope real hard for tier 3, where MAS wanted to do a regulatory sandbox at an ASEAN level. We proposed saying that India is doing the G20 presidency next year. Why don't we do a global regulatory sandbox and get the G20 countries into that global regulatory sandbox? Because there are a lot of issues which need global collaboration, right? Things with respect to climate, how do we kind of have a common nomenclature? The green, which the Europe says is not fully applicable to India, right? Because a lot of things are brown here. It's not purely green. We have this transition, risk which we are seeing, where we need to transition from here to the real sustainable things. Or, for example, cross-border data flows. That is another big challenge. Or even the digital asset space, in the crypto space. How do we all kind of collaborate? So that's where the tier 3 comes in. Probably it's a little far-fetched idea, but we have put in the building blocks for those. So tier 1, we could do it right away. It's being done all over the world. Tier 2, we need to get companies like that which merit our attention with a cross-border use case. Tier 3, in due course of time, it will happen. So that's the nutshell of what we have done with MAS.
That's absolutely amazing. I have a question here. It's that, does it mean that IFSCA is not answerable to any regulatory authority in India? I know you've explained that already, but would you like to just give a short answer to that?
Right. So see, IFSC has been created by an act of a parliament, right? So we are the fifth, let me put it that way, fifth and newest financial sector regulator, right? If RBI is like our elder brother, and then SEBI and IRDA and PFD. So in FSDC, Financial Stability Development Council, all these 5 regulators are there, right? If there is a joint working group between on FinTech or some topics between India, UK, or India, Singapore, all 5 regulators are represented. So it's not that we report into a regulator. We are all at the same level. Only thing is we are a new regulator and our jurisdiction is different. So RBI, SEBI, those are the domestic financial sector regulators, whereas we look at the IFSC zone, which is international. So that's about it. But like RBI or any other regulator, we are kind of rolling it up to the MOF. One subtle difference could be the 4 domestic regulators roll up into the DFS, the Department of Financial Services in the Ministry of Finance. We go into the Department of Economic Affairs, because the IFSC was a very novel project which is being undertaken to bring in the capital flows, and towards that economic growth of a 5 trillion economic goal. So probably some of those factors played in, right? So that's the only difference. Otherwise, we are not reporting into any regulator per se. We ourselves are a regulator. In fact, a unified regulator with more powers in our jurisdiction.
That's awesome. There's another interesting question, that what if we are a very early stage metaverse startup and we don't have any revenue? Can we still apply to the IFSCA?
Absolutely, very much. In fact, I want to tell something here. See, the innovation sandbox and the regulatory sandbox are for folks who do not have any revenue. That is the limited use authorization. If you have to get authorization, you either have to cross through these, or you should have at least 1 year of revenue in the last 3 years. It's as simple. We have kept the bar so low, right? So you need not have any revenue. That's perfectly fine. But since it's metaverse and it is not mainstream, we will not let you go to the regulatory sandbox on day 1. We will let you explore the innovation sandbox, prove to us what the concept is and what you're trying to do. And since metaverse is the thing, I think all the banks are catching up, the JP Morgans of the world and so on and so forth. There are 22 banks in IFSC today, all big banks. Very recently, JP Morgan opened up, Deutsche Bank, MUFG. Already we had HSBC and also the Indian side of it, ICICI, HDFC, SBI. All of them are here as well. In fact, we could see, and you could also come and explore the IFSC to see if any of these banks would be interested to work with you. And if they're interested, then we could have them as partners and put that into a regulatory sandbox, and some of their customers could be your customers as well. So the possibilities are, limitless. So that is one part of it. Second part, which I want to talk about is the markets which this IFSC is looking at, right? One, we are helping Indian fintechs go global. Second, we are helping global fintechs or foreign fintechs to come into India through these fintech bridges and other stuff and our regulation. And third is this IFSC itself. Today there are more than 300 plus companies here. And when you say companies, it's all financial, service companies. It's like New York coming in a small way. It's like Singapore coming in a small way. So you have banks, you have markets, brokers, insurance. So your market is out here as well, and already 300 plus companies are here. So that's the third aspect. And the last thing which I want to tell, probably it is something which is worth telling in this forum, at least as a benefit for folks who are attending this. In India, IFSCA is the first financial sector regulator to come up with an incentive scheme. You would not have heard of any regulator giving incentives to fintechs. So we have come up with an incentive scheme. Basically, what it means is it's grants. It's not that we are giving you a loan or we are taking a stake in your company. It's a grant, which means money is there on the table for you to take if you have a good use case, which you can explain to the committee, right? And we have 6 different grants. And very recently on September 12th, we launched the application form and guidelines for the grant. So the grants types are like startup grant, proof of concept grant. All these means you need not even have a working prototype. You could give an idea and you can build the MVP with the grant, right? So when you're saying you have a metaverse startup and you don't have revenue, definitely you're in a much more mature stage than what we are expecting to nurture. And then there is a sandbox grant. You come into the innovation or regulatory sandbox and become a fintech entity, which we give the limited use authorization. You're eligible to apply for these grants. And then we have a green fintech grant because there's a lot of thrust on green. There is a listing grant because we have 2 international exchanges. You need not run to NASDAQ to list. You could list sitting here, and we given some small change to do the roadshows and stuff like that. And one last grant which we have is not for the fintechs per se, but for the accelerators. We believe accelerators can spawn more fintechs. So for them to run every cohort, we kind of give them a grant, so that the areas are aligned. So these are the 6 different types of grant which we have kind of provisioned. The government has already, kind of budgeted it, and funds are there. And we are setting up an international kind of, a committee of experts. It's an external evaluation committee. The names will be out very soon. We'll be putting it out, and I'm sure, I'll just give you a sneak preview without any names, but some statistics. It's a 10-member committee where people are there from 5 nationalities. You have 40% gender diversity and 30% PhDs in finance or technology. So that's the kind of spread we have. It's truly international because we are IFSC and we cannot have an India heavy committee or things like that. It has to be global. So that's the perspective there.
That's absolutely amazing. Could you share some of the numbers, like what are the value of the grants? How much money people can expect?
Yeah, so you should understand funding winter is around, right? But we are not going to be like the Sequoias and the the big boys. We are a regulator. So what we are targeting as small ticket grants from that perspective for the bootstrapped founder or entrepreneur. So the grants range from anywhere from 10-15 lakhs up to 75 lakhs. That's the range of the different types of grant. The content is all out there on our website. Even we have put up a Gazette notification is out there on the grant and stuff like that. So if you go to the IFSCA website and if you look for the press releases or circulars dated September 12th, you will get some of these information because we launched it on September 12th.
That's very interesting. I'll go through it and share the link with everyone. I think we can take one more question. Is that what is the view currently on security token raises in India? So it's a question from Vivan itself. If you feel it's relevant, you could answer that. Otherwise, no problem.
Yeah, so there were two questions. I think from LinkedIn there was a question on monitoring security, and then there is one on security token. Of course, two are very different. See, security, the first one, monitoring security, absolutely no compromise. We ask for VAPTs, all of those things. So, in regulatory sandbox, probably in innovation sandbox, we can go a little lax because you don't have real users, real transactions, no good business. So it's okay. But if you're going to migrate or successfully exit or get the permission to get into a regulatory sandbox, we are going to come pretty hard on cybersecurity because that's going to be there. On the security token, right? See, now we are slightly getting into a different space, right? Because you're talking about token and then it becomes crypto. So token itself, what is the need for the token, like securities or cryptocurrencies, utilities? There are different categories here. Now, when I say security token from an IFSC perspective, uh, right now we are not encouraging that, because while this is a foreign jurisdiction, we need to understand this is still territorially within India, and we have a dotted line back into India, right? The funds come from India. So India will have to take, the government of India will have to take a clear stance on that. But there is another technicality also involved here, which some of you might not know. There is a SECRA, the Securities Regulations Act, right, under SEBI. And SECRA does not permit, this security token through the LRS route for us. So for a resident Indian, if they have to do something with a security token in IFSC, we have to amend SECRA. Only then they can take the LRS route and come here. So there are some technical challenges too. I mean, so once the overall policy direction is there, then probably we could make all these amendments, which in due course of time. But at the moment, I think we have more low-hanging fruits than just focus on a security token, because you could have tokens on the chain which are not kind of trading anywhere but used within the chain, burned within the chain, and bring in very good benefits for the user and the ecosystem. So we could look at those as well, right? That is one perspective. The other part of it is, see, end of the day, everything is a technology piece. And as a regulator, see, we are still not going to be any different from other regulators, right? Just because it's a foreign jurisdiction, we are not going to allow money laundering. So AML will be strong, CFT will be strong, right? KYC needs to be there. All of those will be taken care of. While we are trying to give a very low bar entry for innovation, that doesn't mean we will relax our standards on all of these things, which finally, are under the FATF and all those, FIU cells and all those stuff. So that's going to be non-negotiable. Right. Recently, you would have also seen what has happened with the U.S. Department of Treasury, OFAC, getting onto Tornado Cash and going into the mixers, final developer, Russian in Netherlands. And, so even the metaverse we were talking about, there's a lot of chance of doing this money laundering there, because a lot of virtual assets can be bought and things like that. So while we are excited about those technologies, we are also very well aware that cybersecurity, money laundering, all these are the risks which we need to mitigate as well. So we have to have the right balance. So it's not that we want to kill the technology, we want to let it thrive, but in a fair, equitable manner, in the safe manner.
Thank you so much for that. That was really nice. I think it was an excellent session. And for those of you who are listening in, and there's just one last question I think we can take. Does IFSC exclusively work on international transactions or digital transactions? Would you like to answer that?
I would like to understand more what do you mean by international transactions or digital transactions, because I couldn't understand that.
So whoever's posted this question, yeah, if you could clarify a little further what exactly you mean to ask. Other than that, I think it was a very, very interesting, eye-opening session. And those of you who are tuning in from different platforms, if you have questions, send them to us, and I'll definitely get back to you with answers soon. Is there anything else you would like to say?
I'll be more than happy to give the answers to you offline as well. Because at the end of the day, see, we are here to help the ecosystem thrive, innovation thrive. We are here to take the country forward, build some groundbreaking stuff. and I think we have the potential to do it. But at the same time, the risks and the other regulatory aspects has to be balanced. So that's what we're looking at. And I mean, let me take a guess at the international transactions or digital transactions question, because I don't see the clarification coming. See, IFSC is a foreign jurisdiction. So essentially the customers are going to be in foreign jurisdictions, right? It could be Indian diaspora. Let me tell you, a person in say Middle East or UK or Canada can buy insurance for his family in India with the insurance guys in IFSC, right? So that's a very innovative way of doing it. Another thing I will tell you, we have a very interesting use case in the sandbox today, regulatory sandbox, not the innovation, the regulatory sandbox. Today, Indians buying foreign stock. Let's say you want to buy the stock of Apple or Tesla, you see a lot of growth. Not now, probably if you have seen 6 months, 1 year ago, and you felt, hey, I'm missing out on those. You didn't have any formal regulated channel to do that. SEBI has not permitted that. There are very many channels, I'm not taking names here, who permit that, but they are not regulated. You don't have a regulator backing it. They are technology channel, they have got into some relationships, some agreements, and they are executing that, right? Things go wrong, you don't have any recourse anywhere. That's about it, right? There's no consumer redressal or things like that. Whereas what we did in IFSCA, through one of our regulatory sandbox experiments was, there are two exchanges already here. So NSE has set up NSE IFSC, and BSE has set up India INX, India International Exchange here. So NSE IFSC, the international exchange of NSE in IFSC domain, the GIFT IFSC, along with the HDFC IFSC. So HDFC is a branch here in IFSC, so we call it HDFC IFSC. They are allowing Indian residents to use the LRS route, right? So you open a demat here with the HDFC IFSC, right? And you can use the LRS, Liberalized Remittance Scheme, to send money to them to buy stocks. Like say we have a fixed set of stocks, Apple, Microsoft. And what we have done is we have taken it to the next level and tokenized them. We gave a ratio. Say you could buy 1:100 of a ratio of an Apple stock. So we have come up with some ratios. So if it's 1:100, so you could, there are, 100 elements of those tokens for one share of Apple. So you as a resident Indian can open an account here in HDFC, transfer money through the LRS. So your rupee becomes dollar because it's coming to foreign currency transaction domain. And then the NSE IFSC has arrangements in US, and there is a custodian there, which is again vetted and backed by the regulator, IFSCA, so that the settlement also happens seamlessly. Only challenge here is it takes a little more than the T+1, T+2 kind of thing, because it takes some time to do these jumps. But then it is not that you're getting the stock as such. The innovation we have done is we are giving a depository receipt, right? That's the kind of a combination we've done. But let me not get into the technicalities. What I'm trying to say is there was no provision to buy through a regulated channel US stocks or foreign stocks. But that solution, we are trying it out in the regulatory sandbox to see how is the interest and whatever. And players like NSE, IFSC, HDFC, and the very standard names are there. So it evinces trust. And on top of it, IFSC as a regulator is completely monitoring it in its regulatory sandbox. So once it gathers steam, we will get it out. So what I'm trying to, in a short line, saying is different products for retail, different products for institutions, innovations are all getting encouraged. Only thing is we need to see the complete end of use case from all dimensions. That's our only take.
Very nice. Thank you so much for that detailed answer. And in any dispute, can we include IFSCA being regulatory as a party? I'm not really sure what you meant by that. Maybe you could send in a detailed question. I didn't understand the question.
So let me share one more thing. In IFSC, the foreign jurisdiction, IFSCA, the authority is going to set up a international arbitration center. Today, if you look at Singapore has an international arbitration center, SIAC, right? Most of it is getting, the business from India, like 60-70% of it. So we thought, why not have an arbitration center in India, in a foreign jurisdiction, right? So you will hear soon from us with some notifications on that. Work is going on. So there is a plan to have this international arbitration center. Now, the dispute is a very interesting thing which has come up, because today when I say smart contracts, uh, when it goes wrong, how do we resolve the dispute if there is a technical error and the payment has not gone? Today legally, we don't have much laws in India. Yeah, contract laws are there, but when you say smart contract, it's a piece of code. It's not really the contract. There is a contract of the contract, like the way the contract word is used, that is not there. So there are some gray areas, and IFSCA, when we come to such regulatory sandbox, problem statements and solutions, we will have to work out a mechanism. Today, we cannot say IFSCA will be the party for the dispute. As a regulator, what we need to do, we'll have to do. Like if there is a grievance redressal which we need to put up, we will do that, right? But being a party, that's a heavily loaded word. So I'm not sure if we will do that as a regulator. If you think an RBI or a SEBI would do something, that's exactly what an IFSCA will also do.
Awesome. Awesome. Thank you so much for your time, and sorry again for disturbing you on a Saturday. But we look forward to more and more sessions with you, and I'm sure the entire blockchain ecosystem of India should definitely learn more about IFSCA and how they can actually take huge advantages of that. Thank you so much.
Right. Sure. I think there was one last question. Should we take that?
Sure. It's totally up to you.
Yeah, because I think let's not leave any unanswered questions. Let's have a complete clean slate. Company authorized in IFSC makes profit. So if you have set up a FinTech entity or any company in IFSC, you make a profit. You have the choice to decide which of the 10 years in the 15 years you want to pay tax. So first 2-3 years you don't make profit, you don't choose those. From the year you make profit, you choose those and you pay zero taxes, corporate taxes. So that's how it is. So because you're established in IFSC, the foreign jurisdiction. So, you could set up a company, you could set up a branch and things like that. So if you're opening up a branch in Singapore, what do? The same way it happens here as well. So if you are going to pay Singapore taxes, if it's applicable, Dubai taxes, if it's applicable, same way you have to pay taxes here. But Dubai, there are no taxes, and IFSC also there is no taxes. That's the tax regime which we have here.
That's awesome. In fact, I had one small personal question. Can any startup come and register itself in IFSC, or they have to first get approved, then only they can register?
Right. So typically how it happens is the IFSC is within the SEZ, Special Economic Zone. As I said, there is a DTA, Domestic Tariff Area, which is India domestic, and then there is an SEZ. So they need to get it from the DC Commissioner. The SEZ has an approving, they need to get the approval from there. But for them to give the approval, they will ask for the approval from the regulator, that is IFSCA.
Okay.
Right?
So we need to first get approval, then only we can incorporate that.
Yeah, so there are people who have incorporated before as well, because it is not necessary that you have to come into the IFSC. The SEC is a multi entity SEC. You could be an IT company and come in there. Gujarat IT policy provides for a lot of things. So it is not a one size fit all kind of a thing. There are multiple structures within it, right? But what I'm trying to say here is, when you come in and you apply, we don't insist that you have to already set up shop there. And that is an important thing. For your innovation sandbox and regulatory sandbox, we do not want you to set up office at all in IFSC. I don't think many regulators do that. So you could be in Taiwan, you could be in Tanzania, you could be in Timbuktu, no issues, right? You could operate from there and be in our innovation and regulatory sandbox. Only catch is when you go to regulatory sandbox, if you're moving money and you need to open an account, an international account in the IFSC, the bank here, the international banking unit, the bank will ask for an address proof. So for that, you will have to set up an office. But if you have a use case where you don't need to move money, like you're playing with tokens, right? Even in regulatory sandbox, it's possible. and you need not set up shop. But when you're going to get authorization, we want you to be here. Similarly, the grants I told you, when you're going to get money from us, we want you to be here because we have given you the money to set up shop, right? So that's the nuance there, right? So the catch is you could send the application in for the sandbox approval, and based on the approval you can decide whether you want to set up or not, because again we need to stay true to our fail fast methodology, right? See what happens if you fail in the sandbox and you have set up the company. Now you have to dissolve the company. That's another headache. So we permit you to not have the company at all here set up wherever you are. Like if you have a different branch or a office somewhere else, you operate from there. And if you're successful, then you can come over, because otherwise it's only going to be more of paperwork than doing any real innovative stuff. So we want to focus on the innovation piece. So that's the idea there. Right. So I think Abhishek has asked one more. Probably this is the last we will take. It keeps going on. Offering should be meant for overseas clients. Suppose we have something for India, we cannot operate in gift IFSC. Okay. So see, in India, if they are in an SEZ, there are, I think, about 260 plus operational SEZs in India, then you could do. But if in domestic India you're going to do, then it becomes a regulatory arbitrage, isn't it? Because we are saying zero GST here. And in India, there is GST, right? So we would not want to do that regulatory arbitrage. So that's where, but then there are some services like through LRS route, you can come, whatever RBI permits through LRS, you can come in because rupee gets converted to dollars. So that's there, but not everything. So it's going to be very, very selective for the domestic India to really be there. And in fact, that is not our market. Our market, or that's not our intention also, to create an arbitrage with India, the India companies. Our intention is to take Indian fintechs global. So you be in a foreign jurisdiction here and serve them, then go and set up offices across the world, because here setting up an office is much cheaper. Getting talent is much cheaper, cost effective than setting up some fancy offices in, jurisdictions like Dubai and Singapore or New York or London, right? So that's the angle. And second is to get foreign fintechs come into India. So the domestic India is not something which we are focusing, and that is not the mandate of IFSC. It's International Financial Service Center. So that's the key thing which I want to tell in. All right, I think we are
awesome.
Good then.
Thank you so much. Thank you so much.
Thank you so much, Rohit. Thank you everybody.
Bye-bye.
Bye. Have a good one.